Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, July 29, 2009. The euro-dollar pair broke below its recent support around the 1.4150 zone, extending losses in the pair seen in yesterday's trading. Risk aversion was heightened overnight as Chinese stocks, measured by the Shanghai Composite, plunged as much as 7.7% before recovering to trade down 5.1%. In New York trading, meanwhile, a weak report on durable goods orders furthered the demand for safe haven, which helped bolster the greenback. Following yesterday's close, the euro tested the 1.42 area, was rejected, and began a 170 pip slide that found support near 1.4015. It's interesting to note that the yen did not see the same demand as the greenback during today's trading, as weak performance in China will have a negative impact on the Japanese economy. The euro-yen, for example, retested its low from yesterday's session around the European Open, rebounded, and then fell again to its support. The dollar-yen pair, after testing a 94 level overnight, following a test in yesterday's trading, rose back to trade near its high for the week by the New York Open. Stocks in the US were down, which usually helps the yen, but this was not the case today. The pair did turn back following its test of the 95.30 resistance area. Stocks were higher in London and in Paris, which helped push the euro-pound pair in favor of the pound. The pair saw a rather strong bout of selling, with the pair sliding from 0.8650 to 0.8560 in the span of about 5 hours. The pair found support from both a downward sloping and a horizontal line of support, which stalled the pair's fall. Finally, the US dollar-Canadian dollar pair rose for a second straight session on the back of risk aversion and weaker oil prices. The pair is taking a breather from its recent decline that has brought it to the 1.0750 level, the lowest the pair has been since last October. The key release today that wound up hurting investor sentiment in the US was June's durable goods data. Durable orders slid 2.5%, the largest tumble in 5 months, and the first time in 3 months that orders were negative. However, taking transportation goods out of the equation, orders were up 1.1%, a positive sign for manufacturing. Though the report is a mixed bag, showing also an important barometer of capital spending up, the negative headline rate garnered the most attention. In other data, Germany's consumer prices slid 0.1% on the month in July, but more importantly were down 0.6% compared to a year ago, the first annual decline in consumer prices in more than 22 years. The decline was led by drops in energy and food costs. In the UK, mortgage approvals rose to a 14-month high, with banks granting 47,500 home loans, according to the Bank of England. Mortgage lending rose to £343 million from £331 million in May. Now let's turn our attention to some upcoming releases. At 5 p.m. today, the Reserve Bank of New Zealand will decide on interest rates. They're expected to hold at 2.5%. Also tonight, Japan posts its industrial production figures, and Australia releases a report on building approvals. Overnight, Germany posts its unemployment change, the UK will release data on housing prices, and the Eurozone posts its end-of-the-month business and consumer sentiment surveys. Tomorrow, Canada will unveil figures on producer prices, and the US posts its weekly jobless claims. And that concludes today's broadcast. Thank you for joining us here at CMSFX.com. And happy trading.